1-1, 2-1, 3-1. This is the day one, right? So this is the day one of the beginners class. And the one single reason that we have this class is because we realized that a lot of people want to get started in trading, but they don't know the first thing about getting started. All right. And I mean, if you do not have that information, it is so easy for you to get exposed to the wrong things, especially in this market. If you don't have if you don't have proper information in getting into a business, you would easily be sold on nonsense, right? Being sold on nonsense becomes very easy, such that you can even now have the totally wrong impression of what the market is about. So what we're going to be doing in this 3-day class is to absolutely give you, equip you, arm you with the necessary information that you need, just so that the next time you hear of Forex, you're not going to be sounding like a noob. You're not going to be sounding like a novice, right? The next time somebody says, "Oh, I'm in Forex trading," you can tell, you have a slight idea what that is about, right? So, um, I'm going to be pulling up a slide that you guys have probably seen before, but yeah, we will be working with it as we're going to be taking it from the very basics of what is Forex, so we might not be able to cover everything today for sure, but we're going to start somewhere and then we're going to work our way up. We're going to start somewhere and then we'll work our way up. So these classes, scheduled to last 3 days, as I said, today, tomorrow, and next. And it would be an absolute pleasure to have you guys in all 3 days of the class, right? It's going to be an absolute pleasure. So, yeah, that being said, let's get started. Shit, shit, shit. That being said, let's get started. Awesome. So I'm going to go ahead and share my screen now. So I need you to just confirm if you see my screen. Okay, admit, great. So please, if you see my screen, I'd like that you just indicate. You can maybe use your mic or just use the chat box. If you see my screen, you can just use the mic to say you see my screen, or you can just use the chat box. Let's know we're together. Let's know we're together. Let's know we're together. So do you see my screen? Oh shit, sorry. I think I muted somebody. So do we see my screen? Can we see my screen? Please just, unmute your mic and say something if you can see my screen. Okay, Joshua, yes, amazing. Um, all right, so welcome to Forex Trading 101, right? Forex Trading for beginners. So today we're going to be discussing what the market is about. What is Forex? What is trading on the market? How can you make money from this market? Okay. So the first thing we're going to be discussing, of course, you see the outline. So the question is, what is Forex? Now, we're going to be doing something as we share. I'm going to be bringing up a whiteboard and, making some annotations just so, you follow. So as you can see here on this slide, it says that what Forex trading is short for what foreign exchange. And it's the act of exchanging one currency for another in the hope of making a profit from changing their values, right? It takes place in the decentralized global markets, which is the most liquid financial market in the world with a daily transaction of over $7 trillion. Now let's break this down. Let's break this down. Let me say foreign exchange. Now what we're saying is you can see that this forex trading, we say it's the foreign exchange trading. You can see that the first three letters in foreign exchange is what? Foreign is FOR, exchange is EX. So forex in itself is just going from these two words, foreign exchange. Right. So forex trading is just foreign exchange trading. And then it is the act of exchanging one currency for another. Now, this might be a very, very streamlined definition, right? In the general sense of the word, forex trading involves trading anything that can absolutely serve as a means of international exchange, so to speak. Any asset class, right, that can serve as a means of exchange can be traded on the forex market. Any asset class that is either money or near money can be traded on the forex market, right? So which means when we talk about the forex market, we're talking about the markets where we trade currencies like, naira for dollar, the euro for the pound, the dollar for the Canadian dollar, the Japanese yen for the Great British pound, right? We trade currencies. We can also trade precious metals like gold, silver, platinum, right? You'd agree with me that these things can also generate some form of what exchange, right? In fact, we trade stocks, we trade indexes. Now, some people might not exactly be new to here when I say things like NAS 100 or S&P 500, right? These S&P 500, these are like, indexes that governments even use, right? These indexes are like pointers. NAS 100 is also like a pointer of the average 100 companies in the US, right? So all of these things can be traded in the Forex market. Now, this market is by far the largest market in the world, largest, most liquid market in the world, with over $7 trillion daily transactions. What that means is today's 7 trillion is different from tomorrow's 7 trillion, different from next tomorrow's 7 trillion. This is bigger than any other market. Do you get what I'm saying? So all of these asset classes in itself are traded in the market. Now it is the buying and selling of these financial assets. That's what we do in the Forex market. Buying and selling. Of course, when it comes to the Forex market, we can now call it something like speculating. Young MPK said he's not hearing me. Can any other person has this problem? Does any other person have this problem? Young MPK says he's not hearing me. Do we hear me clearly? Just so I know whose network it is.
Yes, I can hear you clearly.
Amazing, amazing, amazing. Amazing. So Young and Big, I think you can exit the meeting and join again, just in case it is your network. You can just exit the meeting and join again. So as I was saying, right, this market is by far the largest, most liquid market in the world. Why? $7 trillion daily liquidity. Today, 7 trillion, different from tomorrow's 7 trillion. There's nobody on Forbes list right now that is reaching trillions, not a single person. That's to show you how big this market is. That's to show you that the market is bigger than any one single person in this world by a mile. Right? So it is the buying and selling. Now, in professional words, we can now say we speculate, right? But Forex trading is the buying and selling of financial instruments. That's the best definition I can give to you. Buying and selling of financial instruments, right? That's what it is. Buying and selling of financial instruments. So I can begin to put this down from time to time just so that, we have something to hold on to, right? So I had said it is the buying and selling of financial instruments. Now, these financial instruments can now vary, right? From currencies to precious metals to stocks to even crypto. Because some people would want to ask, so is crypto? It is an integral part of Forex. Do you get what I'm saying? Because why? It's generating foreign exchange. So now we're going to now be measuring on the currency aspect of this for the purpose of this class. We're easily going to be, measuring on the currency aspect of this, right? And then you can see in my next slide here, it says currencies are traded in pairs, right? Where one is bought, the other one is sold. Traders aim to make profit by predicting whether a currency will strengthen or weaken against one another. Now, some of you might have even been somewhat involved in trading without knowing it, and I'm going to prove it to you, right? Some of you might have been involved in trading without even necessarily knowing that you've been involved in trading. How so? Let me show it to you. Now, you can use the chat box or mute your mic if you've ever taken your naira and given to Aboki to give you dollar, or you've given Aboki dollar to give you naira. If you've ever indulged in that transaction, that kind of transaction, or mute your mic or just use the chat box. You've ever given Aboki naira for dollar, naira for euro, or dollar for naira, dollar for euro for naira. If you've ever done that, or mute your mic or just say something in the chat box. Just say something in the chat box. You do that almost every day. Shadri, hey. Why is this person crossing me like a billionaire now? If you say you do that almost every day, it's like there's so much money in your pocket. Now, this is it. Now, beautiful. That means you've somewhat been involved in trading because the moment you give your Aboki the $100 and he gives you 150,000 naira, do you know what you've done? You've sold the naira and you've automatically bought the dollar. That's just what you've done. You sold the dollar, you sold the naira, and you've bought the dollar. So I'm saying, Abuki, that dollar in your hand, I need that one. What am I willing to give for it? The naira in my hand. So I'm giving you, or maybe now you can now give Abuki 152,000 naira, and he gives you what? $100. Do you see what the difference is? Now you're actually making a transaction. That's Forex, right? The only beautiful part about trading Forex is that if you're now doing it in the Forex market, you don't need to be holding on to the physical representation of this cash. Do you understand me now? You don't need to be holding on to actual dollar or actual naira to be able to now trade the markets. That's not, now in the forex market, you don't need to do that. That's just the difference. Do you understand what I'm saying? That's the difference now. You don't need to do that. Right? So now you can see that it attracts. Now you'd want to wonder. Okay, we've said it means you're trading currencies in pairs because the moment you take that your dollar for naira, two currencies are involved at that point. What are the two currencies? The Nigerian naira and the United States dollar. Those are the two currencies that are immediately involved in that transaction, right? So it means that if you also took the dollar, for example, as you said, oh, I'm making a trip to Europe. So you're giving the Abuki dollar and you're expecting him to give you euro. Two currencies are now involved, which is the what? The euro and the dollar, which is what we have here in this example, the euro USD. So what are you doing? You're selling, for example, giving him the dollar for euro means you're selling the dollar and you're buying the euro. Automatic. Do you understand what I'm saying? So buying one simply just means you're selling the other. And that's what we do in forex trading. And that's what we do in forex trading. Now, again, as I told you earlier, you're not buying into, you're not buying the physical, you're not holding physical representation of this cash. Nobody is saying to trade forex, go and find euro, go and find dollar. That's not what we're saying. In fact, the honest truth is what we are actually trading in this market is fluctuations in price. That's what we're trading in this market. We're trading the fluctuations in price level. That fluctuation in price is what we are trading. Now, what causes the fluctuation in price? Demand and supply. That's what causes the fluctuation in price that we're trading. Now, I'll give you an example, right? Let's use the chart. Let's say I use the chart. Hold on, I'm going to pull up a chart now. It's going to be a chart of a currency pair. Let's say we use what is most common. Let's say we use the Euro USD, for example. Now, when we see fluctuations in price, what do we mean? It means that the more people demand for a currency over the other, right? It means that one currency is going to strengthen and one will become weaker. Now, there's a reason people would rather hold on to dollar instead of naira. And the reason is simple. Because in the grand scheme of things, dollar somewhat has more strength than the naira, right? So people are trading that fluctuations in price. There was a time, I think it was like maybe last 2, maybe 3 years, dollar was not 1.5. Dollar was probably 700 or 800, or maybe even 500, right? But now, the more people began to demand for the dollar over the naira, you can see what happened to the price of the dollar. It increased. So maybe 4 years ago, if you were holding 4,000 naira, you'd buy $10, right? $10 would probably have been 4,000 naira. But now it became a thing where we now entered Japa season, plus a lot of other fiscal policies that weren't exactly favorable to the naira. And then before you know, people began to sell their naira heavily and demand for what? Dollar. The person that wants to travel out to US is selling his naira and demanding dollar. And of course, you know the rate at which people have been leaving Nigeria. In fact, right now I can see almost everybody here now has somebody abroad. That's how serious it is. Almost everybody on this corner has somebody abroad, right? So people have been immigrating heavily. But you must understand that the people that are immigrating, they are not carrying their naira to US. What are they doing? They are dropping that naira for dollar. So if there's an increased demand from the side of the people dropping naira to get dollar and travel out, something is going to happen to the price of dollar, right? Now, for you that also wants to invest, because inflation in Nigeria is on the high side, you tell yourself that this naira no get value again. Oh. Some of you that have heard this advice, the best thing to do is to save in dollar. So now when you have 100,000 or 1 million naira that you want to save, you will not save it in naira. You take that 1 million to the bank or to Aboki. You want to buy dollar. What is that doing to the demand for dollar? It is strengthening it. Now, when there's more demand for dollar over a demand for naira, can anybody tell me what do you think would happen to the price of the naira? Which one do you think would be stronger? If people are demanding more dollar over naira, what do you think would happen to the price of dollar? You can use the chat box or you can just, unmute your mic and say something. What do you think will happen to the price of the dollar?
The demand of the dollar will increase.
Thank you. Two people correct. Joshua correct. Shadri correct. The price of dollar would increase. Beautiful. And that's just what happens. That's what happens, right? So now, as forex traders, what do? We speculate. We speculate potential increase or potential fluctuations in this, currency pairs now because there are two. In all my example, I'm using two currencies, which is what the Nigerian naira and the United States dollar, right? So your ability to speculate which is going to gain strength over which gives you an edge. Do you understand? Now, from this very breakdown, we can see it was no brainer. In fact, people could tell from when dollar was at 700, some people could already tell that we were going to 1.5. But guess what? They didn't do anything with that information, right? From when we were at 700, some people could tell because I mean, we started from 150 to 300 to 350 to 450 to 500 to 700. People already even envisaging 2K. That before you know, $1 will be 2,000. And there was a time when we did 1.7, I think. Dollar hit 1,700 to, one 1,700 naira to a dollar. We hit that, I think it was like last year, before the whole floating policy came. Right? So as forex traders, what do? We capitalize on the differences in these fluctuations in demand and supply. So me now, I may not be traveling out, but if I could tell that Naira is 700 now, but because inflation is rising, number one, and I can see that we're in jack passes, in a lot of people are willing to trade their Naira for dollar, I can buy $1,000 at 700,000 Naira then, and I'll be selling the same $1,000 for 1.5 million now. What I capitalized on was what? The fluctuations in prices. Fluctuations as caused by market forces. What is market forces? Demand and supply. That's all I capitalized on. As simple as it can be. That's forex trading. That's forex trading, right? So you can see, as I told you, when you talk of currency parts, it is traded in pairs. You can see here we have the Euro USD, for example. We have the GBP JPY. Now, this GBP JPY is comparing two currencies, which is what the Great British Pound and the Japanese yen. And we said what? When one is bought, the other one is automatically sold. You cannot buy one without selling the other. So if I give a book in my Naira and I take dollar, I have sold the Naira, I have bought the dollar. That's just what it means, right? So we speculate which currencies will strengthen and which one will weaken against each other. That's what we do in the Forex market. And now the beautiful part of this market is what? It's open 24 hours a day, 5 days a week. That's the beautiful part. What this means is the Forex market is not 9 to 5. It's 12 to 12. 24 hours a day, 5 days a week. Now, because of course, time zone difference, the market usually opens in Nigeria here around 10 p.m. Sunday night and then doesn't close until 10 p.m. Friday night. Right, so that's the open working hours for the market, the forex market. Opens 10 p.m. Sunday night, closes 10 p.m. Friday night. Right? So it's flexible like that. And then you would want to wonder for a market that has a $7 trillion daily transaction volume, who are the participants? As people will say, it's where when they see this money, right? So the participants are what? Banks, corporations, hedge funds. When we talk of banks, it is not necessarily just bank and access. We're even talking of governmental banks. Do you get what I'm saying? We're talking of governmental banks because you must understand that before, in fact, that's part of what they are currently fighting right now with this whole what's the name of this? Trying to remember the name. I'll give you the example I'm talking of. It's possible that Nigeria does business with China and will still pay in what? Dollar. The question is, do we print dollar in Nigeria? No. So certain transactions would have happened that would make your country have access to dollar. So you see that even your countries are involved in foreign exchange. So imagine the transactions that would be carried out country to country, interacting with each other. So you see why there'll be fluctuations in demand and supply. That's the type of volume. So you see why it's a $7 trillion daily liquidity. Because this market is not market for GT Bank and Access Bank. In fact, when we talk of banks, they are not the ones we are talking of. We are talking of the government banks, even though they have their own role to play in, whatever liquidity they are imputing into the market. They are not the ones we mean when we talk of banks. Do you understand what I'm saying? They are not the ones we mean when we talk of banks, right? So now these are the participants. We're talking of government banks, central banks of different countries, right? We're talking of hedge funds. You have hedge funds, you have investment houses that are running into billions, right, in equity, and they're managing funds. These guys are also involved in what the forex market. And that's why you can easily see that we're pulling what $7 trillion daily liquidity. This liquidity is bigger than any of your markets. Mention the market, I'll wait. People in Lagos will say Alaba market. Alaba market dares not. If you're on the island, you say island market, it dares not. If you are in Ibadan, you probably say what's it Dugbe market? It dares not. If you're in Abuja, what's that popular market in Abuja? None of it. In fact, I don't think that any of this market has a daily liquidity in $1 million. I don't think any of these markets we've mentioned. Why? Because these markets are not decentralized. When we say decentralized, it means that you're never ever going to be able to take a bus and say you are going to the forex market. All you need to access this market is what? Your mobile phone, your laptop, and internet connection. That's all. That's all. So something that has that much ease of access, you can tell how it's going to be accessed by everybody in different parts of the world, right? Now, for me, it doesn't make sense to leave Lagos market and go to Abuja market to buy something. Why? Because it's probably the same prices in the same markets, right? It's the same prices in the two markets. And the most funny part of it is what these two markets are centralized. They have an actual location. But the forex market in itself is decentralized. So anybody from anywhere can participate. See, okay, look at the participants that we mentioned now. Banks, and I said it's not just your commercial banks, right? We're talking governmental banks, big corporations, hedge funds, proprietary firms. At the last of this chain is what we individual traders. Is we individual traders. Sometimes people would wonder how did we make it to this list? Like I said, I got the run now. You'd wonder how did we make it to this list? Because when you see every other person we've mentioned, you have an insight as to how much equity these guys are coming with. And this is the honest truth, right? Before now, before now, trading the market required proper serious money. In fact, it was only people that were at the pinnacle of success in their careers that could access this market. You with your $100, nobody's no. What do you want to do with your $100? Is it for Gary? Is it for Ewa? Right? It was not $100 market in any way, shape, or form. It wasn't until brokers and the concept of leverage came, which we're going to look into as we talk about terminologies. That's when we can begin to say retail traders started coming into the market. You get what I'm saying? So, that's why you can see that the participants are big shots. But we thank God now we can access this much liquidity pool and even make a percentage of it per day. Right. So you're probably wondering, why Forex? Why Forex? First of all, accessibility. Accessibility from the comfort of your house while you're in your bed. Do you understand me? From the comfort of your house, you can absolutely access this $7 trillion daily liquidity market all with an internet connection. So which means, in fact, the fact that you're in this meeting now means you already have all the requirements to trade the Forex markets because to join Zoom, you need a mobile device or a laptop and you need internet connection, which is the same requirement you need to access the financial market. So everybody here now, you people are eligible to be traders. That's how easy it is. That's how little barrier to entry. Right, 24 hours market, as I mentioned, 24 hours a day. The market is open 24 hours a day, right? 10 p.m. Sunday night till Friday night, 10 p.m. Now, sometimes you might have daylight savings, GMT plus one. The market opens by 11 p.m. and then closes 11 p.m. as well, right? And I'm giving you Nigerian time because 10 p.m. Nigerian time will probably be different in New York time. So, I mean, if this was a trading class in New York, we'll probably tell you the market opens 4 a.m. or 5 a.m., right? Time difference, but you understand the picture. Nigerian time, 10 p.m., closes 10 p.m. Friday, right? So it's a 24-hour market. It's not your centralized market where once it's 5 p.m., they'll start locking people's shops and say everybody go home. That's not what this is here. But again, the fact that it's a 24-hour market doesn't mean you'll be trading 24 hours a day. Sometimes go outside and touch grass. Very recommended. Now, narrow focus as well. I mean, we're talking of why you should trade Forex. Narrow focus, right? And they're saying, unlike the stock market, where you have thousands, tens of thousands of stocks to choose from, the Forex market revolves around eight major currency pairs. Now, this is provided that what you choose to major on is currency pairs. Because again, as I've told you, this market is wide. You can trade currencies, you can trade precious metals, you can trade energies, US oil, UK oil, Brent, whatnot, traded on the Forex market as well. Do you understand what I'm saying? You can even trade commodities. Be surprised, cocoa, corn, these things are traded on the Forex market. They are traded on the Forex market. You'd be surprised. Right. So for the purpose of this class, we're choosing to major on what? Currency pairs. That's the narrow focus. Now we're saying there are only eight major currency pairs, and we're going to get into that. I'll show it to you. Right. But we're saying the fact that the Forex market can offer you this narrow focus is an advantage. Right. Because when it comes to the stock market, there's, to be very honest, a plethora of companies that are listed on the stock market. So sometimes it might be a question of which one is really worth putting money into. Within Nigeria alone, so if we can mention over 100 companies that are listed on the Nigerian Stock Exchange. I'll talk less of when we're talking of, the global stock exchange market, where, it's just overwhelming list of stocks, an overwhelming list of stocks. So it's like, do you want to start to look into all these companies' financial one after the other to be able to, eventually make $100 investment? Do you get what I'm saying? So the Forex market offers you a slightly narrow focus. You can decide to just major on eight currencies. Now, there are also minor currency pairs. I think on and on, we have about maybe 24 to 27 currencies in total, right? But at least you can narrow your focus, right? You can narrow your focus. And then the difference between the Forex market and the stock market is that when you put money in shares or stocks, you are expecting that that company performs for that year or for that financial period. That's how you make money, right? That's why they give you access to their financials. Oh, look at how we've been performing. Look at the profits we've been turning over time, so you can decide. So your expectation is that what this organization turns a profit. That's how you make money. But you see, when it comes to Forex, you make money from both the buying and the selling. Such level of flexibility. If the market is buying, we buy, we make money. If the market is selling, we sell, we make money. So you make money from both sides, both the buying and the selling. So you don't necessarily need to be holding on and praying to God that the manager of this company just does well so that your portfolio can just be green, right? So there's that narrow focus, and then it just helps the entire thing. And then liquidity, as we said, $7 trillion is no joke. Picture it as an entire ocean. Like imagine that you go to, for people who enjoy the seaside, imagine that you're looking at the entire ocean, and that's just money. That's $7 trillion staring back at you. And the $7 trillion of today is different from the $7 trillion of tomorrow. Even if you took a GP tank, right? Let's say you're even Iron Man or you're Hulk, you took a GP tank to an ocean and you fetched the entire GP tank full. Nobody will get to that ocean next and say, somebody has taken water out of this ocean. Do you understand what I'm saying? Like even if you were to take a GP tank, I'm not saying cup or drum, right? I'm saying if you take a full GP tank and you take water from the ocean, the next person will not go there and say, I can see that this ocean has reduced. That's what it means. It means that there's no amount of money you will take from this market, right? That would actually shake the market. And the same way, there's no amount of money you will lose in this market that will make it to the news. Nobody's ever going to say, oh, 1 minute silence for the man that lost $10 million story, to swallow it as though nothing happened. And that's why you must seek knowledge. That's why you must seek knowledge. Because to think that, oh, you cannot be unlucky, just buy or sell, you have to be right sometimes, bro. Before you know, you are down your lifetime savings and you don't even have anybody to tell your story to, right? So moving forward, of course, you can see the market cannot be cornered. We've just mentioned the participants in this market, and we've told you that the fluctuations in price that you even experience is not because one person somewhere is doing it. It's because transactions are happening in every corner of the world, right? People are demanding for currency A over currency B over currency C. So these things are all together affecting the strength of each currency paired against each other. So we're just capitalizing on that, fluctuation in demand and supply. That's what we're doing. That's what we are doing. Like that's what we are doing. In fact, let me give you another example just to wrap this entire thing up. Um, let's see, let's see. And okay, let's track back, say 2020, right? During that entire Corona period, I think that was when dollar was hitting maybe 1,000 naira. I can't remember. No, maybe no, 2020, no way. It was like 350 in 2020, I think 350. Let's say under 500. Now, if you're in 2020, for example, let's assume we could see that a lot of people were going down with the virus, the COVID virus in 2020. At some point, even Boris Johnson had to go into ICU. So now let's see, for example, in US, right? They now said, they realized that people in Nigeria, they're somewhat resistant to this virus, right? Let's say that also be, research found that people in Nigeria are resistant to this virus. And, let's say the people that were testing positive were increasing in the US. If Nigeria for any reason could now be a safe haven for people against this virus, right? And people were leaving the US to Nigeria, what do you think will happen to the strength of the naira?
Mr. Sorry, Mr. Toby.
Yes.
Yeah, so Mr. Sapere or Asakapere or something, please go and end the call. You are having people to join on
Oh,
WhatsApp
okay,
right now.
okay.
Please, you are distracting people. Please, now, please go and end that call.
Okay, so I
Thank
think
you.
there's a call going on WhatsApp. Okay, please, kindly just, if that's you, please just end the call on WhatsApp. God bless. So as I was saying, right, imagine that all of a sudden they're telling you that, oh, in Nigeria, if you're in Nigeria, maybe because of the climate, you can't test positive for COVID-19, and people are running from the US to Nigeria to seek asylum. What do you think would happen to the strength of the currency? What do you think will happen to the strength of naira or dollar? What do you think will happen? You can use your mic, you can use the chat box. Anyone is good. What do you think will happen? Let's just be sure we're following. What do we think will happen?
Nigeria currency will
Be
increase.
stronger.
Do you understand?
Naira will be stronger.
Naira will be stronger. That's what we're always praying for. Amen. Very soon. Thank you guys for the response, right? Well, you're correct. Now, which means that at that point, it is more sensible to be holding on to the naira than the dollar. In the first example we made, we were holding on to the dollar instead of the naira, because people were traveling to US. Now, I'm not saying that the moment people are traveling, one currency will be weak and one currency will be strong. It takes a lot to weaken a currency or strengthen a currency, from your unemployment rates, your interest rates, to your inflation, to your GDP, to a lot. But we're just using examples, right? So you can see that in the first instance, we prefer to hold on to the dollar and sell the naira to get the dollar. In this second instance, we prefer to hold on to the naira and sell the dollar to get the naira. And that's how we make money from both the buying and the selling, right? So we just capitalize on the fluctuations in demand and supply, and then we make our money from it. Simple as that. All right. And then remember I said something about um um retail traders not being able to participate in this market prior to this time, right? And then I said it was only for the brokers and the concept of leverage that made them, that made people like myself and you to be able to participate in this market. So it's not as if the forex market is new. It has been here since like forever, right? But of course, it has been at least way over 20 years, 30 years even, that they've allowed retail traders, start trading. And the only way we can do that is through what? Leverage. Leverage. So now leverage, they're saying leverage is when you borrow money so that you can use a small investment to get a greater yield. That's what we're saying. Now let me explain. For example, the forex market can say, now let's do this maths together. The forex market can say we are offering. Now they can tell you that you need $100,000 minimum equity to trade the forex market, right? Now, in fact, actually, you needed that much. Do you understand me? You needed that much. So they are saying you need $100,000 equity to trade the forex market. First of all, you must understand that whoever has $100,000 is not broke, right? Now, if I said on this call now that if you don't have $100,000, please leave. I don't underestimate you people, right? I don't underestimate you people. I know all of you are rich, but once somebody will leave, I'm so sure that one person will leave. I'm saying one person so that look as if I'm sure you understand. But 100,000 is current for more than 58 million naira. If I'm telling you that that's the capital that you need to start a business, it's because first of all, you are not broke, right? Now the broker now came. The broker is now saying, because of this 100,000 naira entry criteria, we don't have enough people. This is what we will do, right? If you have $100, bring it. We will give you 1 to 1,000 leverage. That's what they're telling you. So they're saying, we will bring $100. We will give you the buying power of 1 to 1,000, which means for every $100 you bring, they're multiplying that $100 by like 1,000. So 100 multiplied by 1,000 is 100,000. So now you're able to hold the same position you would be holding if you had $100,000 just by having $100. That's what the brokers have done for us, and that's why we are able to participate in this market today. Do you understand what I'm saying? That's why we are able to participate in this market today. The broker is now saying, we will increase your leverage, don't worry, right? We'll increase your leverage. You bring $100. So that's why we have 1 to 100, 1 to 1,000. So for every one that you bring, they will multiply by 100 or 1,000, depending on what leverage you select. In fact, these days we have brokers with leverage as high as 2,000, 3,000, 5,000. Although I must issue a caveat, you must learn how to use leverage. If not, uh, it can be a Greek gift. Do you understand what I'm saying? It can cause you, it can cause you pain or cause you happiness, depending on how you use it. Very important. But it is because of this particular thing that the Forex brokers put into place that we are able to trade the markets today. Right? So it means that if I tell you that you need 100,000 to be able to access this market and you have 100,000, it means your leverage is what? 1 to 1. Nobody's giving you any money anywhere. But the broker is saying, you just come with your $100. Don't worry, we'll multiply that your buying power by 1,000. So your $100 will be able to hold the same position that his $100,000 could hold. This is why the first thing to getting started in Forex is having a brokerage account. Very, very vital. Very vital. You need to have a broker account. Very vital. Do you understand what I'm saying? Because at the end of the day now, the broker is now your link. It's now the link between you and the Forex market. Except you have like maybe $1 million somewhere that you're not using. If you have that one, you may not even need the broker account. Just go straight to maybe JP Morgan. Do your thing. Right. But this is how important the Forex broker is. So now let's quickly look at profitability in Forex. Now they're saying, profitability is expressed in a number of ways, right? You can start trading with very little equity. Number one, that's what I've mentioned. The only reason you can start trading with little equity is because the broker has given you leverage. Do you understand? So I think at the end of this class, we'll be requiring people to sign up with the broker. Except you have $1 million, don't sign up. Right. But if you want to be able to trade and you know that your equity is relatively small, between 50 to even $10,000 is small. But don't forget, you're coming from a $7 trillion daily liquidity. So don't think that your $10,000 is money here. That's the honest truth. Is your 10,000 is somebody throwing stone inside the river. Like you cannot find it. It's still a pin in the river. You can't find it. Do you get what I'm saying? So now, entry reason, you need relatively low initial capital to get started. These days now, some brokers accept as this last $10 deposit, right? Some $50, some $100, depending. Do you understand? And then, as I told you, the beautiful part about this is you can both capitalize on the buys and on the sells. It's that flexible. The market is buying, you can buy it. The market is selling, you can sell it. You make money from both sides. That's the beautiful part of it, right? So we're going to quickly move into terminologies, but before we move, I'd like to know if anybody has any questions so far from what we've discussed. Anybody has any questions so far from what we discussed? Anybody, any questions? You can either use the chat box or just unmute your mic. Any questions so far? Talk to me. Joshua, your mic is, yes, talk to me, Joshua. Good evening.
Please, can you talk more about this broker? Because the network was breaking. I can't hear you very well when you're talking about it.
Okay, you want me to talk about the broker a little more? Okay, I get to that.
Okay, you
I
want me
get
to
to
talk
that.
about the broker a
Eesh.
little more? Okay,
Mr.
I get to
Benjamin, you
that.
have
I get to that. Mr. Benjamin.
Yes. Am I permitted to talk?
Yes, I can hear you. Your mic is echoing, so I'll mute mine so
Hello.
you
Yes,
can
I can
talk.
hear you. Your mic is echoing, so I'll mute mine
Okay.
so you can talk.
Okay. I actually wanted to ask a question about that broker account, right? How to get this thing, how to get the account. You said something like that someone might need to have the broker account. So I just want to know how you get the account. That's all.
That's the easiest thing. Worry less. Salvation has come. At the end of this class, the link to the recommended broker that we use will be posted. No, Victoria, I think you can even make it public to the group. Let everybody sign up. Okay, we can make it public. So our recommended broker will be made public to the group. Now, of course, there are certain things that go into choosing a broker. There's 1,000 brokers out there, but again, not all of them are dedicated to helping you make money. There are brokers that would, in fact, that your own $10 is what they want, right? So there are certain things that you need to look out for in a broker before eventually choosing them, from regulations, right? From regulations, brokers need to be regulated. And then we're talking of the same way you have SEC in Nigeria regulating some financial bodies. That's how these brokers are internationally regulated. For example, in Cyprus, they have the Cyprus Security Exchange regulating them. I think they have the FSCA as well, Financial Service Authority, if I remember. There's like maybe four, five, even multiple regulatory bodies, right? So the more regulations your broker has, the better. Do you understand? Now, there are brokers that are decided to just cut corners. So instead of having actual financial regulations, they have certificates that they have is tantamount to CSA registration. But if you don't know that, you put your money in it, and before you know, when it's time for withdrawal, stories will enter. So we have our recommended broker. The link will be posted to the community, I think, after the class, so that everybody can, get started signing up. Because at the end of this 3-day webinar, we'd all be expected to have an account verified with at least a little something in funding, right? A little something in funding. This class is supposed to be a talk and do class. Did you get? Let us as we go. Let us as we go show participative responsibility, right? I mean, again, the class is free. So the least you can do is you just show some level of commitment. So the link will be posted, everybody can do well to sign up. That's nothing. And then, as I said, the broker is your link between you and the Forex market. So there's no way around it. There's no shortcuts. I wish there were, but there's no shortcut. If you don't have a broker account, you're not trading. It's as simple as that. No broker account, no trading. So what are we looking for in the broker account? The broker account with proper leverage. Do you understand? Proper leverage, because we've seen now that if the broker gives us 1 to 1,000, then we can use that $100 to capture moves that somebody that had $100,000 would capture, right? So broker with proper leverage. Of course, moving on, we'll teach how to use leverage and all that, right? The broker with proper spread. I'm not going to talk about that now because we're moving into terminologies. So in terminologies, that's where we would now discuss, what spread is, and all that stuff. So yeah, I think that's Mubarak. I'm going to have to mute your mic. So are we good on that, or does anybody have any questions? Oh, God damn it. Mubarak, please mute your mic. Please mute your mic, Mubarak.
Yeah,
Okay, cool. Come on. Mubarak, please mute your mic. I hate to want to put you out. Please mute your mic. It's a bit noisy where you are. It's a bit noisy where you are, please. Okay. So anybody else with questions? Anybody else with questions before we move forward to the terminologies? We should be rounding up. Okay, Benjamin, I'm going to unmute my mic so you ask. I know your mic echoes, so I'm muting. Go ahead, ask.
okay. Like, can you use the broker account to trade any trade? Like me, I use pocket option and I use FCM. Those are the site I use, trading site I use. So can you use the broker account to trade any of them, or there's a specific one that you must use to trade? That use the broker account to trade.
Okay. Yes, this is one thing. When you open a broker account, you must understand that broker offers different classes of instrument. The broker is not just giving you access to currency pairs. You can trade your so-called crypto, quotes in quotes, right? You can trade crypto, you can trade stocks, you can trade currency pairs. Apple, Google, Amazon, all that, the broker has it. You talk of your currency pairs, GBP USD, Euro USD, all that, the broker has it. Gold, the broker has it. Your Bitcoin, your Ethereum, the broker has it. So it covers, a broker is they cover different asset classes. Do you understand? There are even brokers that allow you to trade commodities where you can be trading corn, cocoa on the brokers. They allow you. Do you understand? So it covers different asset classes. And then for pocket option, one day we will tell you the truth, but not today. One day. So I can see that Damlola has their hand raised up. Damlola Okpeyemi, if you have any question, please you can go ahead. You can go ahead and ask. If you have any question, Damlola, I can see that your hand is raised. So if you have any question, you can either use the chat box or unmute your mic. If I don't get any questions from you, then I'm just going to have to go ahead and assume that you probably mistakenly raised your hand. So that being said, let's move on to terminologies. All right. So now, as I like to tell people, for every field that you find yourself in, we're going to round up this class in another 30 minutes, don't worry. So for every field that you find yourself in, right, there's going to be certain word dictionaries, right? There's going to be word registers. I think that's what it is. That's what I was trying to remember. There's going to be word registers, right? So, for example, if somebody starts to tell me of if I might just be walking past, right? But if in the conversation I can hear something like steering rack, front bumper, gearbox, immediately I don't need anybody to tell me that that conversation is around cars, right? Because those are, those words are in the word register of, an auto dealer. Do you understand? Maybe I begin to hear something like, oh, 6 point something liter naturally aspirated engines. I know they're talking about supercars, right? Same way if I was going past people and I hear them saying something about we need to place him on full strength or half strength. I know they're talking about drips. That would mean that what is something that has to do with medicine. They're probably nurses or doctors, whatnot, right? So the same way, like there are going to be certain words peculiar to every profession. Bring it to Forex. We have our word registers as well. Okay, we have our word registers as well, and then we're going to just do a few today, right? Even if it's just terminologies we're able to cover, we'll cover that today, and then tomorrow we'll continue with the classes. So now I've told you, okay, let's. I'm going to pick this in no particular order, right? So I'm going to pick it from the easiest to the no hardest, but like most easy to understand. We'll work it up like that. So balance. The first one you see here is balance, and what's balance? It's just the value of your account. You understand? Which means if you fund $100 today, your balance is $100. Simple like that. Balance is balance anyway. Do you get what I'm saying? Now, I told you, I said this market involves the buying and selling. Now, what that means is I've broken those market conditions into two. A market condition where the market is buying and a market condition where the market is selling. Now, what is a market condition where the market is selling? You can see this now. We have something called the bear. Now, the bear is a speculator in the Forex market, right? Who opines that prices will drop, right? So if I expect that price will drop, it means in that particular market situation or market scenario, I am a bear, right? Now, the opposite of this, now, because of this, I'm going to do something. I'm going to pull up my Zoom board. That's what we're going to use now. I know I'm currently sharing my screen, but I'm going to use a Zoom board so we can further do some illustrations. So if you can, my whiteboard is coming up. The moment it comes up, I'd like you guys to be able to just confirm that you see it. Once we're done with these terminologies, we'll open room for questions again, and then we'll probably end it here. And then, tomorrow we'll do something different. So please, if you see my whiteboard, tell me that you see my whiteboard. If you see my whiteboard, tell me that you see my whiteboard. If you see my whiteboard, tell me that you see my whiteboard. Oh, damn. External meeting participants can access by website and meeting with us. Okay, okay. Like okay, you guys see my whiteboard. Awesome, awesome, awesome. So now you said something about the two market conditions, right? We said there's a bullish market, there's the market where prices are rising, and there's the market where prices are selling. Now let's do something very, very practical. I like to Richie help us now, please. Don't annotate on the board, please. Please be a good student today. I trust you. Thank you. So now let's do something. Let's do something with general price levels. Let's be very realistic. Um, most of us, right? Most of us can easily remember how or the trend that rice has taken over the years, right? I know that some of us I want to say how many of you have been eating rice in the days of Jonathan, but like what else would you eat? So in the days of Jonathan, please can somebody tell me how much was the bag? How much was the bag? A bag of rice during Jonathan's regime. How much was a bag of rice? Please, somebody tell me. Somebody tell me. Anybody? Anybody? 13K. Ah, you people have been buying rice for long ago. 13K. Now, during Jonathan's regime, rice was 13K, right? Now, this is 13K here, right? What's the price of rice now? What's the price of rice now? I know it's going to be sad to type, but gather momentum. What's the price of rice now? Can anybody tell me? 75K. God bless you. Now, rice is currently 75K, but we're coming from 13K. But you see what did not happen is we didn't move from 13K to 75K overnight. That's not what happened, right? So from this 13K, we probably went to like 23K or 28K, came down to like 18K after season, went back to like 32K, yeah, and then came back to another 23,000. And then, before you know, we're at 45,000. And before you know, we're at 50,000. And now we're at 75,000, right? Now, at the end of the day, from this point 13, even though there's a lot of prices in here, like maybe 25, and then this can be easily be 18, right? And then this is maybe 32, and maybe it comes down again to 25. Maybe now, let's see, coming down again is after December, price drops, and before you know, we're at 40, and then coming to 38, and all the works. Eventually now, we're at what, 75. Now, at the end of the day, from Jonathan's time to this time, has rice been going up or has it been coming down? The answer is clear, right? The answer is clear. If you see it's coming down, you need to turn your phone upside down, or maybe you yourself, you need to turn upside down. It's clearly going up. Prices are increasing. General price levels are increasing. Now, this type of market condition is first of all called the bullish market condition. Now, the bullish market condition is characterized by what? General increase in price level, right? General increase in price level. That's what the bullish. Oh, Benjamin said he hasn't seen my whiteboard. Any other person else has not seen my whiteboard? Any other person else here that hasn't seen my whiteboard? Any other person else that hasn't seen my whiteboard? Any other person else that hasn't seen my whiteboard? Help me, please. I mean, if you see my whiteboard, please help me. Let me know. Let me know. If you see my whiteboard, please let me know. Let me... Okay, thank you, Richie. Thank you. I mean, I even know you see it, Richie. I mean, you draw on it as evidence that you see it, right? So moving on, you can see that this general price level is what? Tilting to the upside. So this is a proper bullish market, right? This is a proper bullish market condition characterized by what? General increase in price levels. Sorry. Now you can see that this is categorized by upward movement. Now this is a bullish market. You would wonder why we call it a bullish market. Now, this is easily named after the fighting style of the animal in itself, the bull. Most of us would have seen those Mexican videos where, they are playing with bulls and then they are carrying one red cloth. You'd notice that anytime the bull approaches them, the bull does something. He uses his horn to take them from ground, then he lifts them upward. The bull takes them and then he flings them upward. So that sustained momentum, right, is what, we characterize this market as a bullish market. So which means if you become an investor in this market or you're a speculator and then you are opining that price will rise, it means you are a bull. It means in this particular market, you are a bull. That's what it means. If you opine that general price levels would rise, then you are a bull, right? We can now look for something that um was the inverse of this, right? Something with a sustained bearish momentum. What can that be? Something with, something whose price has been dropping and dropping and dropping and dropping. Can anybody give me an example? Something whose price has been dropping. Like it came out, it was doing well, but now the price has just been dropping. Um, do you know what? Let's just even use rice. Let's use rice, but let's use it in Utopia. Let's use it in let's assume that it's not in Nigeria. Oh my days. Okay, let's use rice again. Now we're going to be using rice, but we're going to be using the Nigeria that we imagine, not the one that we are in now. Okay. So let's see. for some reasons, the farmers are eventually making more money. Is it or no? You know, and then price levels are now dropping, right? Let's say rice then starts to go from 75,000 and then it goes down to maybe 50,000. Right? Maybe December then comes and then rice goes back to like 60K because of course the demand increases. And after season, it drops. What's this? Oh, sorry. I used the wrong annotation to like think. This is the pen. I use the pen. Right. So now let's say price goes back to like 60K and then it drops. Now, eventually, let's say we now have this entire swing of rice, and before you know, we are buying rice at the same price level before. What's at this price level? 25,000. Now, this entire movement now, what type of speculator would I be? I would certainly not be a bull anymore, right? Because why? The bulls opine that price will rise. The bears opine that price will drop. Now, this is also named after the animals fighting style, right? Now, if you've seen where a bear is attacking somebody, the bear doesn't throw punches. It's not a kangaroo. He also doesn't use his horn because he doesn't have. He uses his claws. And what does he do? He swings downwards because the average bear is bigger than you. Bigger than you, yes. Right? So he swings downward. So the bear swinging his hands downward in the fighting position is already giving you all this, it's like trying to tell you that, oh, this is a bearish market, also named after the animals fighting style. Do you understand? Sometimes I personally wonder, right? How is it that you choose to name market conditions and you're naming them after fighting style? That just tells you that this entire market is warfare. So when you come into this market with forgiveness, that's your problem. That's why you will never make it. The trending or the market conditions in itself are named after fighting styles, right? A bull's fighting style, a bear's fighting style. You now come with forgiveness in your heart. The Lord is going to help you. But like, do we understand? Right. So also because the bear would always swing. So if you're a speculator in this market, opining that general price levels will drop, you are you are a bear and you are what? Your sentiment is bearish, right? So moving forward, you may not hear us say things like the market will it's a selling market, quote in quote. You may not hear it's a selling market or it's a buying market here. You might easily say it's a bullish market or it's a bearish market. I would expect that by now you'll be able to figure out what a bullish market is and what a bearish market is, right? You'll be able to figure it out. Bullish market, upward movement, bearish market, downward movement. So when you think that, general price levels, or when you think that maybe, for example, Euro USD, if you think the euro is going to gain strength over the US dollar over time, what does that mean? Are you now, if you now, okay, let's test our knowledge. If you think that the euro is going to be gaining strength over the US dollar over time, right? What does that mean? As a speculator, are you bullish or are you bearish on the euro US, on the euro? Are you bullish or are you bearish? Now, you think that the euro will gain strength over the US dollar. As a speculator, do you think you're bullish or you're bearish? Bullish. Richie. Richie will give you class captain. Will give you class captain. You're right. You're bullish because you're expecting this guy to gain strength over this guy. Right. But if the inverse were to be the case, where you're expecting the USD to gain strength over the euro, it means you are bearish. Now, that's what it means. The euro USD being bullish means the euro is stronger than the dollar. The euro USD being bearish means the dollar is beginning to gain strength over the euro. Simple like that. So the euro USD being bearish is like saying USD euro is bullish. That one now will confuse some people. That one will confuse some people. If I confuse you, say something in the chat box. If I confuse you with that last statement, say something in the chat box. If I confuse you with that statement, say something in the chat box. I'm not seeing anything. It looks like I have first class students here. We understand what I said. Now, be saying that, if you opine that euro you would gain strength over the US dollar, you are bullish. You expect this general increase in the price, right? And then if you now opine that the dollar would be stronger than the euro, it means you expect that bearishness. But that bearishness now means that the euro is losing strength to the dollar. Now, why it is good for the dollar is not good for the euro. But again, we make money from both of them. Okay? We make money from both of them. That's the beautiful part. We make money from both of them. Now, don't forget that I said we trade fluctuations in exchange rates. We trade fluctuations in exchange rates, especially in currency pairs. What we trade is that fluctuation in exchange rates as caused by what? Demand and supply. That's what we trade, right? So we've been able to cover two terminologies, the bullish market, the bearish market, the bull and the bear. Now, let me just give you this one. It's a run through. Usually, in a currency pair, the first one is usually the base, the second one is the quotes. So if I have Euro USD, the base currency is Euro, the quote currency is US dollar, right? It doesn't matter which currency comes first. The first is always the base, the second is always the quote. So I can, for example, use NGN USD, right? The base in this case is always the first one, which means this is the base, this is the quote. Do you get what I'm saying? This is the base, this is the quote. So why I'm explaining to you because sometimes there can be an inversion, right? So if you're on a Euro USD trade and you see something like this on Euro USD, sorry, that's not the tool I wanted to use. Great. So if you're on a Euro USD trade and then you see something like this on Euro USD, right? If you were to invert this currency, no one is higher. Exchange rate is what determines which one is higher. It's not as if one is higher. I'm just trying to tell you how price movements can work sometimes. Now, if this is the Euro USD, right, and then you see something like this on the Euro USD, what they are telling you is that what the Euro is gaining strength over the United States dollar. That's what they are telling you, right? But if this was USD Euro, right, what you'll be seeing would not be this, it would be this. Because why? This is the guy that is gaining strength. The Euro is gaining strength still. Do you understand me? But we've changed the base. You know, the base here was euro. That's why we were bullish. Now the base here is dollar and we are bearish. Do we understand or do I show you in real-time charts? Do you understand or do you want me to show you in real-time charts? Do we understand or do I show you in real-time charts? Do you understand? Amazing. One more person. One more person understands and we move forward. One more person understands and we move forward. Do you understand what we just did? Or do I show you in real-time chat? One more I understand and we move forward. Please, one more response, guys. One more response. One more response, guys. Do we understand? Please, you can unmute your mic. We're not fighting. Shadri, thank you. I understand. Amazing. Yinka, let me see the chat, boss. It's 2 against 1. Ah, 2 against 2. Benjamin, where did you come from? Okay. Well, one more now. We need to settle this tie. There's two I understand, and two, let me see the chart. One more person needs to break this tie. We need the tiebreaker. We need the tiebreaker. Do I show the charts? Mubarak, help me now. The charts. The eyes have it. All right, so let's show the chart. Let's show the chart. Let's show the chart. So because we were using Euro USD, for example, now I'm going to share another screen. It's going to be my chart. The eyes have it. Okay, so confirm now that you see my chat. We're going to be running up this meeting in another 15 minutes thereabout. Give 5 minutes for question and we're done. So confirm that you see my chat, please. Confirm that you see my chat. I want to believe that you see my amazing scene. So now this is the Euro USD. Now let's take the 4-hour time frame, for example. I want to use a time frame that is trending. Okay, now see what we have here. Now see how that what you have, right, is all this move. 1, 2, and the market is about to make perhaps this is in fact, let me see if I can use something real time. Ah, this guy is not trending. Okay, let me use the daily time frame. I'm trying to find something that is trending. Okay, good, amazing. Now look at the daily time frame chart for Euro USD. Now what would you see? You see that we are constantly doing this, right? We're going to the upside. Bear in mind, Euro is the base currency, USD is the quote currency. Now let's invert this. Let's look for USD EUR. And I told you that what USD EUR is going to be the opposite, right? Boom. Do you see how that USD EUR is now bearish, but it's going to be the same price? Do you understand? Like it is the same price. The only thing that changed is the base currency. Now, when it was Euro USD and it was buying, it was because the euro was stronger than the dollar, right? So we were going up. Now that it is USD Euro, the euro is still stronger than the dollar. right? But to show that now is we are now in a bearish momentum. Why? Because the euro is no longer the base currency. The US dollar now is. It shows that the bearish is gaining strength. Now, this is the simplest explanation. If the base is stronger than the quote, we will buy. If the quote is stronger than the base, we will sell. Simple like that, right? Base greater than quotes is what? Bullish. Quotes greater than base is what? Bearish, right? So now in this case, the quote, which is euro, is stronger than the base, which is the dollar, and that's why we are bearish, right? So when I invert it to be euro USD, it doesn't change the one that is stronger. The one that is stronger is still stronger, right? The euro is still stronger than the dollar, and then you can see that what we are bullish, right? Because now the euro is the base and the US dollar is the quote. So for the chart, I hope I've been able to do justice to that, right? I hope we've been able to do justice to that. So I think that I explained awesome. So I think that I explains, the bullish, the bearish. Now I'm just showing you this so that when you guys eventually pick a pen, because some people can make that mistake. I can show you GBP USD now, and then the next thing you go ahead to analyze will be USD GBP. And then you say, I'm seeing something different. So that you know. Do you understand? So that you know. So per terminologies, we've done justice to the bulls, the bear, the bullish market, the bearish market. We're going to come back to bid and ask, right? And that's because I want to show you in practical examples as well. But let's see which other terminologies we can cover. So of course, we've done bulls, um, drawdown. Hey, is it not too early to be introducing you to drawdown like this? Let's allow you place your first trade now. But we talked about balance where we said um the initial equity. So if you fund $10, your balance is $10. You fund $50, your balance is $50, right? But if you fund $50 and you take a trade, right? So for example, you fund $50, you now take a trade, you're now making $20. While your balance is $50, your equity will be $70. Now, what is $70? Balance plus open positions. Do you understand me? Your balance plus your open positions is your equity. Your balance plus unrealized profit or losses is your equity. So if you have $50 in your balance and you are having $20 profits running, while your balance is still $20, your equity is now 17. When you close that running trade, your balance becomes 70. The same way, if you have $50 balance and you're running a loss of maybe the same $20, while your balance is 50, your equity will be what? 30. Your equity will be 30. Do you understand? So the equity is your balance plus the consequences of your trading action. That's what your equity is. Balance plus the consequences of your trading action. So if your trading action is yielding profit, then your equity will be higher than balance. If your trading action is taking you to the trenches, then your equity will be lower than your balance. Do you understand? This free margin is a traumatic place to be, especially when we talk of margin call. But free margin, the amount in your account available as margin for a new position. So it's like your free margin sometimes is determined by your leverage, right? If you have a high leverage, you have free margin to take more than one trade, right? On even smaller accounts. Um, Please, nobody's requesting to join. Nobody's requesting. I don't see any request. They need to check their network. I don't see any join request. I'd have accepted. So that's free margin. Okay. So all of these things I'm going to show you tomorrow on the MT4. So this is what I recommend. I recommend that everybody signs up using the link that has been dropped on the group. Create a broker account, verify it, download either the MT4 or the MT5 to your mobile phone. Okay, because some of these things will be showing tomorrow live. Like will be showing you, what equity means, what balance means, all of this will be showing it to you tomorrow, right? So I advise and that you sign up, verify your account if you can, download the MT4 or the MT5 on your phone so that tomorrow as we meet again, we're going to be doing something a bit more practical. Okay, I already linked my broker to MT5, which you one step ahead, big man. Let's go. So we're going to be doing that tomorrow. Practical, a bit more practical than today is. Okay, so get the MT4, MT5 on your phone, right? So we do tomorrow. So I'm going to talk about this one briefly and then we'll leave you here. We'll leave you here for today. Uh, there's a little bit more terminologies. Okay, let's run through it. Let's run through it. So now these ones are easy. Long, as you can see, long is just price action to buy. So sometimes I might say I'm buying, sometimes I might say I'm longing. Are the same thing. Don't be confused. Sometimes I might say I'm longing, sometimes I might say I'm buying, right? So alternatively, I might say I'm shorting, or I can say I'm what? Selling. The same thing. Do you understand? I can say I'm shorting or I can say I'm selling, the same thing. Now, I want to show you this bid and ask price when we eventually meet tomorrow, right? As well as take profit and stop loss. So the last two things I'm going to quickly run through before we call it a day is technical and fundamental analysis. So what is technical analysis? Quickly, I already showed you guys on the chart. You see that entire chart thing that you saw there is technical analysis. Let's not drag it, right? Representation of price movement via candles or line charts or whatnot is technical analysis. That's what technical analysis is. So that's where we do all the analysis, right? To know where more currency is stronger using certain tools, of course, right? To know which currency has an edge over the other one. And then it informs our decision whether or not to buy or to sell part time. That's technical analysis. So technical analysis is using the charts, right? I don't want to say candlestick charts because that's going to be limiting. Some of you guys can eventually start to use the line charts, right? So technical analysis is basically using the charts, like what I showed you earlier, to make trading decisions. Fundamental analysis, on the other hand, is using is a macro or strategic assessment of where a currency should be trading based on any criteria except price action itself, right? So these criteria can include the economic conditions of the country that the currency represents, monetary policies, and fundamental elements. Now, what they are saying is this big English is just telling you that fundamental analysis uses data, right, to determine the strength or weakness of a currency. For example, if unemployment is high in a country like Nigeria, right? What do you think is the resultant effect on the naira? Does it become stronger or does it become weaker? If unemployment is high in this country, what do you think is the resultant effect on the naira? Can anybody try? Does it become stronger or does it become weaker? Weaker. Benjamin said weaker. Any other person else wants to try? Does it become stronger or does it become weaker? Anybody else wants to try? Does it become stronger or does it become weaker? Stronger or weaker? Stronger or weaker? Say something to me. Stronger or weaker? If unemployment is high in Nigeria. In fact, I think I might give you guys the mic at this point. Benjamin, do you want to say something? Do you want to tell me why you think the naira will be weaker? Do I let you talk? Do I let you talk? You say no. Does anybody want to try? These are the kind of things that prompt us to do giveaway. Does anybody want to try? If unemployment is high in a country, what do you think happens to the strength of the country? First of all, no wrong answers, okay? Anything you say, there's no wrong answer. So does anybody want to try? On that 10 seconds, anybody wants to try before we move on? 9, 8, 7, 6, 5, 4, 3. Okay, I mean, if you don't know.
Weaker.
Okay, Mr. Yosola, talk to me.
Is weak. It will the naira will be weaker now.
Why?
Unemployment, lack
Mm-hmm.
of industry
Mm-hmm.
is as a result of lack of industries. There will be low in productivity, low
Mm-hmm.
in exportation will be low. So definitely your exchange rate, patronage to your exchange rate will be weaker, will drop.
Okay. Mr.
So
Miss, yes, I understand what you said. Mr. Ayotola, we hereby crown you class captain of this class. Richie, that title has been taken from you, especially after I see this your comments in the chat box.
please,
It
abeg,
doesn't
don't cry
become
me class captain.
it doesn't become stronger, it becomes weaker. Now you've given a very, very valid explanation. Unemployment increases. It means more people are out of jobs, right? It means that your labor force is struggling, right? Now, if more people are out of job, imagine that in your family, in a family of five, only one person is working. That one person has to cater for four other people. So one person goes to work in the morning. Before he comes back, the other four people in the house have collected something from the aboki that is outside the house on credit, waiting for you to collect salary. So you that you are even working, they've reduced your own purchasing power so much that by the time you finish working self, all the things that you want to buy for yourself, you cannot afford anyone. Why? Because they say they wait for you. Do you understand? But if out of those five people, three or four were working, all of you can put resources together and say, okay, let's buy this for the house. Everybody still has spare change to run, extra other things. That's when you can now start to realize that you like perfumes or that you like wristwatches. Do you get what I'm saying? So now once that happens, already there's a reduction in your purchasing power. That's at the macro level now. You see, at the micro level, at the household level, there's a reduction in your purchasing power. If there's a reduction in your purchasing power, you are buying most of your things on credit. The woman or man that you are buying from outside your house cannot restock as fast because she's waiting till month end that they should pay you before you pay her before she goes to market. Do you understand? What that does is even slows down the person that is selling wholesale to her. And if the person selling wholesale to her is also slow down, the person producing is also slow down. Do you understand me? That person producing is also slow. If that person producing is slow down, at what point does he say, oh, I want to employ one extra person? No, now. He doesn't employ. In fact, he probably delays salaries because now he's waiting for people to buy. But if there's more people working, people's purchasing power are increasing. In fact, you can generate foreign exchange. Do you get what I'm saying? The industry that used to produce 10 or let's say 100 bags per month can easily start to produce 200 bags because more people are buying. Purchasing power is increasing. They're producing 200 bags, they need more than the capacity that produced 100 bags to produce 200, which means what? They employ more. In employing more, your labor force increases. If your labor force increases and you produce enough rice, you can even have foreign exchange. You can start to export. You export and you get comparative cost advantage because it's costing you less to produce this thing here and it's costing them to produce it there. So you can ship to them and then they buy. And before you know, you are generating foreign exchange. So you see how that one single thing as unemployment has this much spiral effect. There's other things, there's other pointers, other factors like inflation, interest rates, but that's for tomorrow. We've already used 1 hour and maybe 30 minutes on this class. So we're going to be looking at, but all of that put together, right, is what? Fundamental analysis. So all of those things in themselves can also tell you a country that is performing, a country that is not performing. Let's use very recent thing, the war in Ukraine. The war in Ukraine versus Russia, of course, you can tell that a lot of economic activities would be halted because of that war. So if the war in Ukraine is strong and then nobody, if there are three missiles left and right, you want to go and open shop. Is that what you want to do? So if the moment economic activities reduce, the entire economy of that country is in what? Standstill. It's like island hold up when the lockdown Milan Bridge. Standstill. Do you understand? If that's the case, you can immediately expect that general price levels will do what? As the general price levels, the strength of the currency will drop. It's just normal because why? You're not even producing anything. So everybody's just going on what they have. Do you understand what I'm saying? These things are what? Fundamental analysis. So these are the macro assessments of an economy in determining or in determining the strength or weakness of the currency. Now, other things you can use to determine can range from the monetary policies, right? The fiscal policies, taxation policies, and all the likes. Do you understand? The way a country supports infant industry, all of these things, economics is basically what fundamental analysis is about. Do you understand me? Economics is what fundamental analysis is about, right? So you can also use that because again, by the time you can fundamentally tell that the country's currency will be weak or strong, when you start to see the graphic or the price action representation on the charts, you can now pair your knowledge of fundamental and technical to then make that informed decision of if to buy or sell. So you see that it's not about luck. Luck is not what you need, right? So is it clear to us now? Is it clear to us now? Is it clear to us now? Fundamental and tech. Awesome. Richie, please. That's what it is. Do you get what I'm saying? So that's fundamental analysis. All of these things contribute to the strength or the weakness of the currency, right? And then we use all these things to make informed decisions. So the next time somebody tells you that forex trading is gamble, you see how much work that you are putting into it. If you were to pick, if it was probably if it's gamble, proper sports betting, and Man U was playing any team in the world, it's a no-brainer. Everybody knows that Man U will lose. Everybody just mute your mic like that. Nobody should tell me anything. We all know that Man U will lose. We know that Onana will concede, right? That one does not need fundamental or technical analysis. Does not need fundamental or technical. Everybody knows that Man U will lose. So I'm just trying to tell you that there's a level of work that you put into trading, that it makes it doesn't put it on the same level as your normal gambling. Even though it still carries a level of trading still carries a significant level of risk, right? But which business doesn't? That's the thing. Which business doesn't? Do you understand what I'm saying? So far good, so far so good. Amen. So far so good. Do we have any questions? So far so good. Any questions at all? Any questions from anything at all? Just ask before we do our closing remarks, and then. So any questions at all? Any questions at all? Any questions at all? Any questions at all? We have 3 more minutes. So any questions at all before we call it a night? And then we wait for episode 2. So Mr. Otola, your mic is unmuted. Let's hear you.
Yes.
Awesome.
Hello,
Talk
good
to me.
evening.
Yeah, good evening.
Is there any terminology like psychological level?
Psychological level.
Yes. The technical analysis.
You've taken us to day 2 while we're in day 1. We'll get there, but you see, how do I explain this to you and sound like a beginner still? When we say psychological levels, of course, I opened the chart. I showed you the charts. There has to be something we need to be able to do around these levels. Their price is going to react from somewhere. If the buy will start, the buy will start from somewhere. If the sell will start, the sell will start from somewhere. Do you understand? So marking all these levels now, right? Anybody can call it any name. So if they call it for you psychological levels, it's not because the level is psychological. The level did not study psychology in school. You get what I'm saying? But like they would call it, people would certainly like it's okay for these names to assume, for these levels to assume different names. But of course, when we want to buy or sell, a lot goes into it, right? In analysis, right? So it is as we go into the technical analysis that we now begin to look at this whole thing, and then you can now see what, quote unquote, they call your psychological levels. So just all I need you to do is show up tomorrow and next, and then before the end of the class, I'm sure you'd get it. So any other questions at all? Any other questions at all?
Excuse me, sir. Please, how much is the minimum amount to start
Oh, yes, I'm so sorry. I saw
the?
that question in the chat box. I forgot. Now, as I told you, entry barrier in this trading is very, very, is little to non-existent, right? So with as little as $10, you can actually start trading the market. But again, I need to issue the caveat that nobody has ever gotten rich from funding $10. Do you understand? So how much you make is still a function of how much you fund. So when somebody funds $100 and somebody funds $1,000, both of them can make 20% in returns. But why 20% on $100 is $20, $200 to the person that has $1,000, right? So you must understand that even though you can fund very little, you still understand that scaling up is a very, very huge part of this business. Scaling up is a huge part of this business. And I think I explained this thing to you guys during the market outlook. I said, if you have 10,000 naira, you want to start pure type business, they'll tell you to buy XYZ amount of bags and start working. But if you have 10 million, they'll propose the factory to you. Do you understand the difference now? Do you see where equity comes in? That's why, even though you can start with $10, we don't advise that, $10 is now what you fund. The better the equity, the better the money you make. Of course, while gaining knowledge, because knowledge is the most important thing, right? Knowledge is the most important thing. So I hope that answers your question, Mr. Damilola. So any other
Thank
questions?
you.
You're welcome. Any other questions before we call it today? Any other questions? So lastly, I know that some of you already have you lost $23 today. I want to say count it as a lesson, but I really hope that you learned, because if you did not learn the lesson from losing the $23, then there's more ahead. That's the honest truth. And if you really want to not lose money, you see, you can absolutely leverage on the expertise of traders. For example, we at Learn Trade Markets, we have a copy trading system, currently that you can copy with, I think maybe $100 or $200 minimum, right? So once if you fund that in your account and then you copy our trades, anytime we place a trade on our one account, the same trade is replicated on your account. So as we make profit, you make profit. Easy like that. You don't even need to lift the finger. The entire process is automated. Do you understand me? Entire process is automated for you. So rather than constant, because this $23 that you lost now, you're coming off very generous. You're more generous than Davido. But the question is, how much more losses do you have in you before, fatigue starts to set in? Because it's easy to lose $23 today and say, I lost 23 today. Tomorrow, when you lose 40, okay, access to that, amazing. Of course, you're going to be contacted. Benjamin, what you can do for me is you can probably just drop your number in the chat box so that the admin here can reach out to you and give you all the details on the copy trading. So everybody here that is listening to me, you can absolutely access that function, right? You send the link to the broker, to the platform, sign up, verify your account, fund with at least maybe $100 or $200 depending, and copy our trades. Now, the money remains in your own account, right? We have our account as well, but as we trade, the system replicates the same trade on your own account. That's what it does. It replicates the same trade on your account. So when we close, it closes there as well. Do you understand? So it's not something that maybe anybody's in charge of your money. You want to withdraw, absolutely, you have access to that. It is your funds, right? It is a more flexible system than giving somebody money and not knowing what happens to the money after. All right, so you guys can leverage on the copy trading, especially if you have a 9 to 5. Especially if you have a 9 to 5, I understand that trading might take you a bit of time to master because again, it requires a level of commitment. Let's not lie. Okay, so you can leverage on that. IOTALA 0.14, you're getting there. Just 0.14, you're getting there. You're getting there. Me, I'm not going to tell you that you will not lose. Praise God. The gospel according to Forex is that you will lose. But if you know what you're doing, you will make more than you lose. Even as Christians, the Bible did not say that your life will be without temptations. It said that it will come. That, but God will give you strength. Do you understand? So, so let's not sugarcoat it. Do you get what I'm saying? So to tell you that, oh, no losses in this business is to lie to you. There's not a single broker in the world that is regulated. Check their platforms. To the bottom, they would always say it. Trading CFD carries a significant level of risk. But again, I'll tell you, no risk, no Ferrari. So you want to play it safe for the rest of your life and be driving Toyota Corolla. You decide. You decide. You will win more than you lose. That's why you are here, to gain the knowledge that sets you apart, right? So the same way some people lost 23, another person lost 0.14, another person has placed a withdrawal today. That's the game. The game is the game. So you just need to work. You're much interested in the copy trading. Amazing. Danola, you can also just drop your number so you're contacted. So you're contacted. You're contacted. So pretty much that's all you need to get started. So if you're interested in the copy trading, the admin is there. You can just drop your number. I should contact you immediately. And one last thing I want you guys to do for me, one very last thing is we'll be opening the group after I end this call. So I'd like to know your thoughts. If you really enjoyed the class, please go ahead and say something. Just let's know what your thoughts about the classes, what you would want us to do tomorrow as well. Things like that, so that we can at least encourage other people to lock in, plug in. Right? I always say this: the internet ways of making money don't last forever. So let's utilize the time that we have now. Let's print. Let us print heavily. So Shadra has also dropped the number. Victoria, please, I would hope that we're taking note of the people who have showed interest in the copy trade so we can absolutely reach out to them. We're going to open the group after this call. Please go ahead and let me know your thoughts. If you enjoyed the class, I'd love to know. Give us that little bit of encouragement to show up here tomorrow. This class is also being recorded, so it will be available on the YouTube channel soon. You can go ahead and rewatch it. Okay, you can go ahead and rewatch it for sure. So, just in case there was anything you didn't get clearly the first time, you can absolutely have access to it again. That being said, thank you guys so much for your time. Let's meet again tomorrow. Same time, same station. That's how they say it. Same time, same station. I'll see you guys tomorrow, 8 p.m. Zoom. And then we'll continue from the terminologies. And don't forget to sign up with the broker. Download your MT4 and MT5. See you on the next one. Have a good night rest.